Hey, super humanitarians and Next Level Tribe, welcome to the first week of Dividends Aristocrats, where every single week we look at one dividend stocks that we can collect. And this year, our goal is to collect enough dividend stocks that will give us good passive income from dividends. Now, I want to first say that right now, this is a recording, and I wanted it to be something interactive. So I do hope that you guys don't mind that it's a recording, because right now, me and my team were in Lombok, Indonesia, looking at the Classroom of Hope. This is the school that we are really looking to help to build up and getting you guys to actually sponsor this school, donate together as we build passive income, we build wealth, we give wealth. And this is the condition that their schools is in. And look at the kind of classroom they are in. I think that we can do our part to help them. So I was really worried that when I'm there, the internet is not as strong. So I did this recording. I hope that you guys really can still learn from it. And please let me know in the comments below if this is good, and also give me your ideas, your questions, and let's interact together in the comments below. Now, the first dividends aristocrats that I want to talk about today. Before I review it, I just want to explain what are dividends aristocrats. These are stocks in the S&P 500, and they have been giving dividends and increasing it every single year for the past 25 years at least. So without further ado, the dividends aristocrats I'm going to talk about today is Stanley Black Decker Inc. Okay, what is this company about? If you heard of this company, please comment below and let me know whether you have used some of the products before. Now, I just want to share that this particular company, right, is a very strong company and it has been around since 1843. So how long is that? That is 147 years. Okay, they've been paying out dividends for 147 years. They are 160 over years old company. And consecutively, they have been increasing their dividends for the past 56 years. Now, this is amazing, isn't it? For dividends aristocrats, you need to at least hit 25 years. They double it. In fact, this particular slide is from their investors presentation. And the way that they make money, very simple, using the tools like the drills or even some of the lawn mowers. And most of their revenue, as you can see, comes from tools and outdoors. This is a retail consumers, where people buy straight away from the source and they use it. And for the industrials, it's about 2.5 billion. But most of it, you can see 14.4 billion is still from the consumers. Now, guys, I will share why I choose this particular company as the first stock. In fact, if you just go past a few slides, right, you can see there are many very strong stocks like AT&T, or even, I would say, another very strong contender, IBM and Walgreens. These are so-called very highlighted stocks that people have a lot of interest in, and their dividend yield can be up to even 6.4%, 4.2%, 4%. And for this particular stock, Stanley Black Decker, you can see is way down here at only 3.4%. But there's a reason why I choose this stock, because what I really want to bring into the community is a stock that not only gives dividends, but has high quality business model. Okay, so like I want to share with you something like example, when I was looking at Walgreens, it is at a very attractive price based on history. However, when I take a look at it, right, there's something that concerns me. And let me share with you something that I really look at for businesses. It is the book value per share. Now, we do look at revenue and make sure that it's increasing, which you can see that over the years, Walgreens looks rather stagnant. Well, in 2020, 21, 22, we know COVID happened and they are struggling. Most businesses are struggling. However, Walgreens is still staying strong, but it remains stagnant. And one thing that really bothers me is the book value per share. Now, even if a company remains stagnant or their revenue doesn't grow as much, if they are able to retain the earnings, okay, able to increase the margins, every $100 that they collect from the customers, okay, in the end, they are collecting more. Meaning to say they reduce their expenses along the way. That's a way to increase shareholders' value. And that's where the earnings will actually show, and the earnings will flow into the book value per share. I personally like to look at book value per share because it really behooves me when a company every single year, their book value per share do not increase and in fact decrease. So this is something that really bothers me a lot. So even though Walgreens giving out good dividends, not really keen on that. Now, comparatively, Stanley Black Decker selling tools, heavy machineries. You can look at them. They are doing very steady in the midst of even the downturn of the economy. Yes, granted, we can see that they go up here, and in 2020, 21, 22, okay, there was a dip in this period. 21, 22, they bounce back up. Now, the thing that they didn't really do very well, as you can see, is the net profit margin. So when I read into the investors' presentation, I realized they put a lot of emphasis on that. The thing that I like to see is book value per share. Again, here, increasing beautifully. What it means is they retain the earnings, and not only that, when you read into their annual report, right, the amount of money they make, they do not just retain for the sake of retaining. They take at least half of it and pour it into acquisition. Okay, so you can see right here, this is the key things that is happening. And let me share with you something interesting. So their total revenue is about 16.9 billion. That's for 2022. 2023 has yet to be released. But look at this. So overall, their revenue is 16.9 billion. Their market cap is 15 billion. Meaning to say this company is making 16 billion, but you can use 15 billion to buy over the whole entire company. How amazing is that? So it's almost like one point something. Okay, in fact, it is the market cap, sorry, is actually lesser than the revenue. I think it shows a lot. Okay, and the dividend 3.2, not really very high, but not very low. Now, why do I like to look at this company? It's not just only because they give dividends consecutively. By the way, if you're in Singapore or if you're in certain countries, the dividends from the US stocks, has withholding tax at about 30%. So you can just knock off 1%. It's about 2.2%. The thing is this, dividends aristocrats, I'm not after their dividends. I'm after the fact that they can give dividends consistently, and therefore institutions like to buy into them, and the price will continue to go up. And it shows a lot of strength. So my main strategy is not really to get the dividends. It is to buy strong dividends giving company, because historically it is shown that they can grow. And at the same time, it is for investors like us, especially if you are new, to collect our first source of passive income. Now, this is the part that I like a lot when I read the investors' presentation, the report, is they have been pushing down their inventory reduction. Now, what happened is during the COVID session, they have learned something. Some of the inventory, the things that they are holding, when they hold too much, it causes them for the warehouse space, and some of them, their shelf life. So they keep reducing, and you can see it is effective reduction. They've been reducing every quarter. So what we can expect, okay, since it's already proven, what we can expect in 2023, depending on the particular revenue, we can expect a higher net profit margin, or else ceteris paribus, all things equal. Okay, so I'm pretty hopeful for this particular company. Look at the dividends, beautiful, giving out consistently over years, increasing. So if let's say you have bought it 10 years ago, you can see it's right here, about $78, $80. Okay, you have collected over $26 worth of dividends, and there's about 32% returns on investment. Now, you may think that it's not a lot, but again, I think over time, you can see that you can collect all this passive income. It's at least a good start. Okay, so dividends aristocrats, again, Stanley Black and Decker, in my opinion, overall, the valuation is also very attractive right now. How do I know? Okay, for me, again, I use price to book value. Okay, the 5 years average is 2.39 and the current is 1.61. I like to look at something like that. Again, is it confirmed that it is something that will be bouncing up? We can use other indicators. One is the price to book value. Another one, because they are dividends aristocrats, and they are actually highlighted as dividends aristocrats. A lot of the institutional investors like to look at what we call dividend yield. So based on history, the dividend yield based on 5 years average is 2.37. In fact, I think the 5 years average can be lower, because you can see 2022, okay, the dividend yield is 4 point something. Usually it's around this range, 2 point something, 1 point something, but right now it is 3 point something. Now, for dividend yield, we want it to be the higher the better. Dividend yield means for every, let's say, $100 we invest, how much dividends are we getting? So if you see a 3.29, it is $3.29. That's right. Okay, so it is 3.29. Like you put a fixed D into the bank, $100, they give you $3.29 every single year. That's how you look at it. So you want it to be as high as possible based on $100 that you invest. So when you see a higher dividend yield, it is actually a better valuation. So 3.29, not say super attractive, excellent, but rather than chasing something that gives me 5, give me 7 without strong fundamentals, I'd rather look at this. Okay, look at the technicals. Technical side, I've looked through quite a number of dividends aristocrats. I want something that has been turning back uptrend. Quite a number of the stocks went downtrend and they are still going downtrend. I would like something that's uptrend, and you can see higher highs, higher lows, ranging slight uptrend, but I think it is hopeful. So they just need to actually announce a very good quarter, a very good results. I believe that it will go up. May not be an explosive up, but the whole point of dividends aristocrats is slow and steady wins the race. Okay, so guys, I do hope that this is a very short video, but you do learn something, you do enjoy it, let me know in the comments below. If you enjoy it, just give me a thumbs up. Let me know that, hey, give us more. Let me know what you feel. Even if you don't really agree with it, it is lovely. This is the point of the whole community sharing experiences together. And also, I've written a full report in our Super Humanitarian website. I'll put the links below. Make sure you go and read the report and continue to discuss back here in these comments below. It helps me to actually boost the algorithm, get more tribe members to join our Super Humanitarian vision together. Okay, that's the whole purpose. So very short video this time. I really do hope that you guys don't mind that it's a recording. In fact, maybe without like interacting with you guys, it becomes a lot more sharper, a lot more succinct, and we save a lot of time. Okay, so continue the discussion. Now, next week, so every week we'll come up with a Dividend Aristocrat. Next week, I'm super excited to share this particular stock that I found. Look at the dividends increase and most importantly, the book value increase. This one is a super yummy, delicious stock. And one more thing that I want to highlight you, it is the net profit margin. Net profit margin shows a lot, and these Dividend Aristocrats, I believe, will have a potential huge growth in the next 5 years. Not just a slow dividend giving company, but maybe a fast growing dividend company. So excited to share with you guys this. Again, do let me know whether you enjoyed this session, and together, next level, let's go ahead and become a super humanitarian. I'll see you guys in next week.